shorter version of answers, the only thing like one. Okay. Hello and welcome to GamesHUB and Crypto Talk Show with our investors, partners, and remarkable personalities. I'm Constantin Kogan, co-founder of GamesPad. And in today's episode, we'll discuss smart investing in the bear market. And we're excited to introduce you to our guest, Wahid Chammas, chairman and co-founder of Faith Tribe. That's our portfolio companies. A lot of you know he's also co-owner of Faith Connection and founder of CEO of TyreGate Capital, private equity platform with ownership in 35 companies, 30 of which are leaders in fashion and fashion technology. So Wahid, I can talk a lot about your experience at Goldman Sachs, and other groups. Like you have probably 25 plus years experience in this private equity / fashion, but I wanted to introduce yourself. I think it would be better if you just tell us a little bit about your background.
Yeah, no, thank you, and honor to be here. So yeah, I am in the private equity background, and I haven't really done anything except for invest in businesses through many different cycles. So obviously I've been through a lot of economic cycles, bear markets, bull markets, and really quite new to blockchain. So one of our first companies we tokenized 2 years ago, and obviously launched it earlier this year, in large part to your help. But hopefully we'll do a lot more on the blockchain.
Perfect. No, for sure. I believe you will. And I like what many would think, like a bear market can have a great investment opportunity, right? And if you know how to make the right decisions and the timing, right, that can be perfect. So in your vision, right, what's the current market situation and where do you think we're going to go from here?
Look, but markets have been very, very distorted. I mean, you could actually take it back to the 70s. Ever since we got rid of the gold standard, what really is the value of things? And distortion has been taken to a completely different level now. We had $1 trillion of debt in the early 80s. Now we have 31 trillion of debt in the US. We have 330 trillion of debt globally. It took us decades to do 1 trillion of QE. Then it took 08 to 2014, 15 to get to 3-4 trillion, and then we print 6 trillion in a matter of 6 to 9 months. Okay, so the whole thing is just getting compressed and compressed and compressed. And so I truly believe that you have to have two hats. One is, I think you want to go structurally long risk assets over the long run, because while the raising rates now are making things very difficult, I do believe structural inflation is a necessity, because no one can explain to me how we're going to service 330 trillion of global debt. And that doesn't include pension funds, unfunded liabilities in different cities and states. This is just sovereign debt. But against that backdrop, you've got to invest in real companies that create value every day. We can talk a little bit about that. In the case of the blockchain, tokens that have a lot of utility value, so that you know that value is being created every single day and is not dependent on liquidity or flows, etc. Over the long run, you want to know that you are compounding your value. And if you have a constructive view of risk markets like I do, because I frankly don't think they're going to be able to raise rates a lot more than they have, maybe 50 to 100 basis points max before things really crack. You're also left with making sure you do your homework and picking great companies.
Yeah, I mean, the rates are crazy, and we can see the inflation, it's US is like 5.5, like 8.5, and it's getting higher, and then UK almost 10%, and I mean, we have other countries like Sri Lanka, like 70%, like inflation, like generally. So the economies are plummeting. We see the domino effect of what's happening, like generally overall, and obviously crypto, there is this narrative that is like uncorrelated asset class, but we all understand when people are like, they're concerned about the asset class that helps them to pay for their rent, pay for their food, the basic needs, obviously they're also a little bit skeptical for the riskier asset classes. So in your opinion, what do you think is going to happen, like in the given that it's not getting better, right?
So I like Constantine. I like to think 6 months ahead. because everyone can read, everyone can watch CNBC and see everything that's happening today and quote the inflation numbers you did. I like to say, okay, where is the puck going to go? What's the next pivot? And I was way too early calling inflation. When they started printing like crazy, I said inflation was going to happen 2-3 years ago. It finally happened. I mean, you cannot print this much money. Okay, 20 trillion globally was printed during COVID, which is ridiculous. 6 trillion in America alone. You cannot do that and not expect inflation, okay? Especially since everyone's at home not producing anything, for crying out loud. Having said this, I'm actually very constructive now because core PCE, which is the inflation number that the Fed really focuses on, that's been decelerating. So inflation numbers that you're looking at is a lagging indicator. 40% of inflation is renters equivalent, owners equivalent rent. You could see real estate really tanking in the last 3 months. So all the different inflation indicators are, the second derivative is a material slowdown, and now even the first derivative is going negative. And so I'm thinking that in 3 to 6 months, you're going to have a much better inflation number. The Fed is going to overdo it because they're just a bunch of idiots. All these guys are completely unaccountable. They print like idiots and drunken sailors. And literally a year ago, in Wyoming, he was saying deflation is a big threat, and now he's saying inflation is a big threat. I mean, you cannot make this shit up. But they will end up pivoting by force because they're going to crack something. I mean, the way things are going now, things will crack. So I have bad news and good news. The bad news is things are going to have to get really ugly. They are already ugly. They'll probably get a little bit uglier to the point that everyone starts to panic, and then they pivot. And then the day they pivot, good luck. Everything's going to go hockey stick because there'll be no more meaning to fiat. That's it. There'll be no more credibility left in the system. Structural inflation will be here forever, and the right crypto projects will do incredibly well. But if people are in pain in crypto because of a lot of the speculation, they ought to move away from speculation and more into investing in crypto. Okay, I cannot say this more than enough. So invest in projects that have great staking, great utility, great free cash flow, great prospects for huge addressable markets, and not just the gimmicky stuff, because the gimmicky stuff will not be protecting you when things get rough, right?
And it's curious. I'm sure you've heard. Like yesterday there's a interview of Jamie Dimon, that he called all crypto tokens decentralized Ponzi schemes, which is really
I saw.
Yeah, and this is, to me, it's hilarious. As if he knows a lot about Ponzi schemes. I'll give him that, right? So the question is okay, so when the faith in fiat will plummet, and then we'll see several, as you mentioned, several maybe projects will do really well in crypto because people will trust it, the decentralized solution better than the national and central solution. So what do you think would that be and how it will look? What strategies would you apply?
Okay, so for instance, I'm not going to talk about my project, but for instance, we are empowering independent designers in a permissionless way. The most rigged system in the world is high-end fashion. It's a bunch of few companies controlling 3.1 trillion, very few left, very little gravy left for independent designers that are in the tens of thousands that make up a measly 450 billion. Finance is completely rigged, right? We talk about Ponzi schemes. I'm not going to address Jamie Dimon per se, but the entire fractional reserve banking system is one big Ponzi scheme, right? The guy stops buying bonds, the bonds start to crater, yields spike, the system becomes insolvent. Guess who's a Ponzi scheme? I mean, the entire bloody fiat system is a Ponzi scheme. So I'm not going to go there. We all know this, whatever. So I think it's silly. So much of JP Morgan is being invested in the blockchain and crypto, so it's shocking. Guess what? Celsius went bust. Voyager went bust. There was no bailout. Okay, so before they criticize and I come from the fiat system. I'm private equity traditional, so all my companies are traditional except Faith Drive. But what I love about permissionless decentralized is there's no big brother. You're on your own, and we are self-regulating. The moment that JP Morgan becomes self-regulated, then they can come and make a snide opinion like that. Okay, we know where they were in 2008. So against that backdrop, there's a lot we could learn, and there's a lot of silly things we're doing this myopic focus on shilling and community and marketing, and not really focusing on true value creation, what projects are doing, what problems they're trying to solve in a permissionless way. I think we're doing ourselves a disservice. The aggressiveness of Celsius and all this. I'm happy that we self-regulated. I'm happy you and I are still having a discussion when Lehman times 10 occurred and no one was there to bail them out. But still, we can do a lot better job of being mature and and doing a better job running our projects.
So if there would be like more of a concrete, like specific, I would say advices that you can give to any company, how to basically persevere and like survive in this bear market, like, and how to be successful. You mentioned already, yes, to focus on the utility, to focus on the value proposition, and like maybe something else that, you know, that you see that can be pretty efficient and beneficial for the company.
I'm going to give one piece of advice. I wish I went with my gut reaction in February before we launched. I was focusing a lot on finding a community that was understanding traditional markets, value creation, free cash flow, our balance sheet being revenue positive, all that shit. And I was told, no. Build a community, build hype. Who are your hedge funds? Who are your VC funds? And I had to get X amount of names. And if you don't get those names, you're a loser. You're tier 3, you're tier 2. Make sure you have a very limited circulating market cap at TGE, because your first day performance is everything. Your pop, if you're not at 10x or 5x or whatever, you're a loser. And I was like, holy shit. I fell for it. And we did well. We did okay, but I should have just really gone with my instinct and ignored all that. And really focusing on having more time to find the right partners, more long-term partners, locking them up for 3 years, doing less shilling and all this stuff that is very endemic to crypto, because none of those guys are around today. None of them, Constantine. Okay, they've all fled. Some are bankrupt. And so my advice to project is don't get bullied to do the things that are so short term, so focused on your one-day pop, so focused on the pump, because post the pump, you've got the dump. And that is, it's like, you know, someone who gets drunk, the hangover is horrible.
Yeah, it's a rule of the jungle. Unfortunately, it is true. We've seen it in many projects, and obviously you're not an exception. And it's so true that like the value investors are people who will stick with you regardless of the cycles, right? People who will support you and try to do introductions, to somehow like assist, you know, like, and do it not only when it benefits them, but also when it's a mutual story you're building together, right? And it is tough, yes, I feel you completely. But if we were to talk about the positive side of things, right? You know, so it's impossible to predict what's going to happen in the near future. But by the end of the year, right? You know, so what is your gut feeling telling you? What's going to happen? Like, you know, because like we see from the Fed, like more kind of tips that they can raise interest rate like even higher, right? And it can, obviously the domino effect will be like across the world, you know, very, very also specific. So what do you think will happen in crypto?
I mean, it's a very stale answer. It's a typical answer that you got from others. We're going to go through a year 2000 situation, and 10% will survive.
And what if you would say 10% of the, what would be, if you say 10% of the companies will survive out of thousands of projects, right? So what do you think will be the prerogative of the projects that will survive? Like, will they have, like, let's say, vibrant community, good treasury, like other like utility?
Obviously, they'll have a business, they'll have utility, they'll have staying power. Like, we're going through difficulties now, Constantine, but I know that there's parts of my business that are pumping free cash flow. That helps. We all go through the vagaries of the markets, etc. But having a real business that you're solving, having enough capital to make it through, having enough supporters, and really staying true to your problem and not, let me tell you what doesn't pay the bills. What does not pay the bills is, and a lot of crypto projects are still mired in this, is a myopic focus on community, marketing, shilling, pumping. Because when we go from 3 trillion to 2 trillion to 1 trillion, then things are a problem. Okay. We'll run out of money. Okay. Money will just get sucked out. And so by very definition, the people who are surviving are the ones that are creating true value and are solving a real world problem. And the domino effect is probably worse than what you're saying, because like today, so many projects are running out of capital. So many projects have no runway. So many projects are not really solving a problem. It's just a great idea or a bunch of cartoons on a phone. And those get out of style very quickly. In the metaverse, a lot of fashion brands were so panicked, Constantine, buying land like crazy last December, January, knowing that it was stupid, but we felt obliged to do it because we were scared. We were told whatever, we were bullied into it. We didn't do it. But today, there's not a brand that will buy land. Everything we do on the metaverse has to be free. And the metaverses are saying, well, what's our business model, right? So your business model is you have to bring in brands, you have to build content, and then visitors will come. Selling what is purely unlimited is proving to be a futile process. And so to answer your question, what looks like a great business model today might be a very different business model in 6 months. The metaverse is a perfect example. Selling NFTs on OpenSea is a perfect example. But having a sustainable business where you're solving a real life problem, in our case, we're allowing designers to go into the business of fashion. We buy their products, we manufacture their products, we help them enter NFTs, access to the digital design studios, register their IP. All those are real problems that you need to go somewhere to do. Just like Uber solves a problem that if you have a car, you can get into business, or Airbnb, if you have an apartment that's vacant, you can rent it. So when you solve real problems and you have a real utility and a real revenue model and cash flow model, then you're in good shape. Otherwise, it's difficult, very, very difficult. Because money, you cannot have a business model that is based on always raising money, right?
Yeah, 100% agree. Otherwise, it's just, I mean, listen, even some traditional companies, they have this, they had this type of problem with, like, some like Uber, like, they were growing too fast. They need to capture the market, right? And then they were never profitable in some ways. Like, they were spending more money just to expand. But it's but they still made money. They still have like cash flow, and you can see that that's how and why you were actually increasing the streams of investments. But I agree with you. There are many challenging parts of this. Now, I want to give the floor to our listeners who are coming from YouTube, Twitter Spaces, and other places, like, who are asking questions, to ask you directly, right? Sure. Jumping right into it. So Captain Huddle from Twitter is asking, do you think hodling and DCAing, I never heard this, DCAing, is the right way to invest even in under undesirable macro conditions, or is it better to stay on the sidelines and wait?
So I didn't fully understand that, but basically, I really believe, I'm going to give you an example, okay? So Constantine, if you had 1 cent, and I'm just giving an example, and it doubled every day, how long till you become a millionaire? So 1 cent doubles every day. How long? Is it 10 years, a year, a month? How long do you think it takes?
1 cent every day?
Yeah.
Doubles every day? Oh yeah, and I have to compute. So basically, okay, so it's 30 days.
Just guess. Is it 10 years, a year, a month?
Give me a second. 30 doubles. No, it's faster. It's for sure. It's faster than 10 years. If it doubles every day,
yeah, for
sure, it's faster than 10 years. I just need to compute the right number. Give me a few.
The answer is 29 days.
29 years.
29 days.
29 days. Yeah, that's what I was sure it's under 1 year. I just didn't know exactly the number.
So what's the point? The point is, if you wait for macro conditions, etc., you always miss the art of compounding, and that's very Warren Buffett-like, but that's the reality. the person who wins the war is the person who compounds value every day. I asked the question, what is the best performing S&P 500 sector in the last 50, 40, 30, 20, but never the last 10? And no one ever gets it. They always say technology or whatever. The answer is staples, food staples. And in that, it's tobacco. And the take-home lesson is you create value every single day in small increments, Constantine, but it compounds. And then over long periods of time, you end up beating the hair as a tortoise. And so my idea is you invest every day what you can invest, and you pick your projects, you pick your thing, and it's very, very boring what I'm about to say. And so long as your companies that you're backing create value every single day or solving a legitimate problem and the thesis stays intact, you have 20 or 30 of them, and you add to them every single day or when they get weak. And then over time, you build value. When you time the markets, you get it wrong. Let me give an example. Everyone is bearish about inflation, interest rates. Today, I cannot find a single bull. If Erdogan convinces Putin and Zelensky to finally call a ceasefire tomorrow, what will happen to markets?
Probably
I'm asking. Exactly. So here you are waiting for the macro. What are you waiting for? Powell to stop raising rates? I mean, so everyone expects the same things. What dictates markets is the unexpected. And so I'm not very good at the gambling that. And so my suggestion is always think about compounding value. And this is where my traditional mindset is. And create value every single day.
That's beautiful. And there are many ways how to do that, even with existing portfolios. Like
and today you have staking.
Staking, exactly. You can stake in the existing tokens.
Exactly. So take your favorite projects, your favorite tokens, stake them, earn yield, and then always invest what you can afford to lose, right? And then over time, you'll see that grow in bull markets, bear markets. And like a lot of people don't want to touch meme tokens today. If we get a ceasefire and a deceleration of inflation and they pivot and everything goes hunky-dory, the first things that are going to pop are the ones that have gotten beaten up the most. It's the same thing in every market, stock market, bond market, etc. And so I just urge people to just have a diversified portfolio and think a little bit more long-term about being a tortoise that beats the hare. Everyone wants to beat the hare, but the point is the hare never wins.
100%. I agree. That's a great example. So Moxie from YouTube is asking, in terms of tokenomics in a project, what would you consider a red flag and exactly why? Maybe there might be a lot, but maybe few.
Yes, the lack of tokenomics.
Right? You mean the lack of tokens on the TGE? Or
no. The lack of tokenomics, meaning what is a token used for? Does the token get burned? Why are tokens over time going to be taken out of circulation? By utility, use, etc. And so the biggest red flag is when you have a hype project, a very big hype project where there's like celebrities. Like we have a lot of celebrities, but that doesn't pay the bills, right? So we have celebrities of this person is buying that token, this person, but then there's no real use for the token. Or you cannot articulate that to me is a very big red flag. Okay. Or like, for instance, the tokens can be used to buy something that you're not sure will exist in 6 months to a year. Okay. I'll give you an example. A lot of the metaverses who I'm friends with are going through that struggle right now. They have a native token. They want to sell land and there's very few buyers for the land. So what happens to the utility of that token, right? If your token is being used to buy milk every day, you've got to drink milk, right? So figure out a real utility is not based on the use case of speculation. It's based on the use case of something essential, okay? And so that's another sort of red flag. So, let me give an example of a great token utility, my favorite token utility of all time, and that's Ethereum, right? Because every smart contract based on Ethereum have to be built on Ethereum, right? Same thing with some of the other blockchains, Polkadot, etc. Those are phenomenal utilities. I am not a fan of buying tokens just for the purpose that it goes up or down, whatever. I won't mention anything so we don't get hate mail, but there's so many tokens like that.
Yes, totally. I completely understand what you're saying. So I'm sure our listeners they understand too. So the other question is coming from Grand Crypto Auto from YouTube. Is asking, there are certain aspects to look out for when investing in a project, both in bear and bull markets. And are there specific conditions to look out for in different market cycles?
So I didn't understand that question. Sorry.
So basically, what he's at, like, I think what he or she's asking, right? So there are a lot of aspects, like when you, like in a bear market and bull market, there, like you mentioned, right? There are different cycles, right? So what would you pay attention more in different cycles? For example, right now we're in bear market, right? So you mentioned
so I would focus on utility. I would focus on making sure I go back to my staples. I go back to my tobacco. In a bear market, if every single day you are using the token, or you're building something where every single day you use the token no matter what, that is going to survive any market condition. If you're in a market that is like the lockdown market, okay, people invested in stay-at-home businesses, Zoom, etc. Those are very, how can I say, sectoral, thematic kinds of investing. So my suggestion is, in a bear market, you want your horses, you want the things that are paying the bills every single day, right? Ethereum is a great example. I'm not going to talk about my project, but Ethereum and all that every single day gets burned. And in a bull market or in a thematic market like COVID, nuclear war, I don't know, I'm making things up, like something that happens as an event. In that scenario, then you have to think about the theme. So if Facebook goes bust, not this is going to go bust, but gets under more scrutiny, maybe decentralized social media. That's a very big phenomenon. A lot of great projects are being built on decentralized social media, like SoMe, what Gavin Wood's trying to build, etc. So that's intriguing, right? So then you would play a theme like that, okay? But in a bear market where everyone's hunkering down and the theme is salvation and conservation of capital, just go with the daily workhorses.
Mm-hmm. And there are a lot of questions about the way you analyze investment and the way, because we don't have a lot of time, so I'll just ask you the last piece of information. So is there the question, I think before that, you remember about the DCA and the dollar cost averaging and the percentage. Maybe you can have a very practical advice, like, for example, if people already they buy your narrative, they think, okay, it is smart to invest in bear market and take a certain proportion of risk. Let's say from the 100% of their assets, of their savings or money they can put into investing, right? What percentage would you advise to, maybe on a daily basis or on a monthly basis, to allocate to projects?
So that depends, obviously. This is a tough one. So I honestly am going to surprise you, because obviously I'm a project owner, etc. But different situations require different things. For the first time in history, I would buy bonds. My short history, at least. Okay. Bonds have not been attractive. Now they're finally attractive. You can buy a 2-year at 4.4, 4.3, 4.1. So I would have a chunk in that, and then you could sell out of that and invest when you feel a bit more comfortable in other things. I would have a lot of money in global equities. So I would say maybe 30-40% is in global equities, 30-40% in the 2-year bond. And the global equities are relevant because, unlike the US equities, emerging markets in Europe and some of the other asset classes are trading at 10, 11 times. And then have no more than 10-20% in crypto, okay? Or private equity or something a bit more esoteric. And then in crypto, the best thing to do is just have 3 or 4 projects that you like, and or more if you like, and then just every single time you have that extra money, just spend it, and buy those projects and stake. And then you'll find in 3 to 4 years, if you really believe in the projects and they have real utility and they're creating real things, they will become the next winners. Because you want to be part of the 10% of crypto that survives a very bad market, right? And it doesn't matter how much Polygon or Polkadot are down versus where they were 10 years ago or 5 years ago. It's huge. And so that's the kind of idea that I have in terms of long-term value creation. So I wouldn't put more than 20% of your asset allocation in crypto, especially given where equity and bond valuations are today. So it's probably not the answer you wanted me to give you, Constantine, but since you gave the personal
I actually believe it's an honest answer, and I prefer those like transparent answers. Like even though it might listen, I'm also like, there are people who are risk averse and a lot of people who are risk adverse. Like, so I truly believe it's as you mentioned, like it's not black and white. People have to pick and choose like according to their risk tolerance and according to their particular situations, where what they're already allocate. Obviously, you need to research where they are, but I think it's a very valuable, because most of the questions here I try to connect the dots between like 3 or 4 questions. They were about the strategies, how not to miss out, how to invest, how to do it safely, and et cetera, et cetera. So I think you did well, being very kind of honest, because that's what you do, right? And that's what people.
Yeah, I mean, if I can just get 1 second, like as a project owner, I have to give a value proposition. Why should you buy my token, right? And so obviously we're now back to the IDO price, which I guess some things are worse. But every single day, we're trying to create value. We're revenue producing. If I get this right, I'll take 1% of a 450 billion market, which is 4.5 billion. So the token will go up much, much, much more than the 50 million fully diluted market cap today. At the same time, I give protection for my investors, because you could stake it, or you could use the token if you're ever bored or fed up and buy a whole closet worth of clothes. And I never changed the price of the token. So if X amount of tokens could buy a jacket, even if the token price goes down by 50%, the same number of tokens can buy that jacket. And so I protect my token value and holders by at least giving them something material they can buy that's tangible and can be valued somehow. So, a lot of people say, Wahid, if I bought $1 million worth of your tokens and it went to zero, what do I do? And I say, well, you use those tokens, you buy a heck of a lot of our inventory, and you sell them on Amazon or Farfetch, and you collect, I don't know, maybe 50 cents on the dollar or 40 cents on the dollar, right? And that's if the token went to zero. So I don't want to talk about my project, but to the extent that a project gives defensive aspects, staking, tokenomics, real utility, real revenue, real free cash flow, very hard for me not to say that, okay, if you like what we're doing and you put a little bit every day, in 3 to 4 years, we will not have had a good experience for you. And if there's Armageddon, at least you can get some clothes. So
yeah, no, I hear what you're saying, and I think people who are listening right now, they appreciate your transparency and your dedication, right? So, I mean, I have to thank you again for sharing.
Oh, thank you.
Experience, right? And I think it was very valuable, like short and sweet and straight to the point, which, that's what we like. Thanks everyone for joining GamesHUB today, and please ask your questions even online when we're going to post it. I'm sure he will if he will direct it specifically to him, we will find time to maybe answer a few questions more when we post it. And thank you so much for joining us.
Thanks a lot, guys. It was great. Thank you.
And every 2 weeks, 3 p.m. UTC, we're going to come back. We will see you more.
Thanks.
Cheers.